That brings us to council discussion. Any items for council discussion? Councilor Jameson.
Just one. I had just came from City Hall a few minutes ago. I had a personal tour of the swamp, as it were. It's the first time in a long time I've been down in the basement of City Hall. Last time I was there, my dad had a parking spot in the basement. We used to run around there as kids, screaming through City Hall. Now I'm screaming in other ways, and it's kind of weird. But anyway, and then I also got a tour of second floor of the new engineering departments, and boy, what a difference it is. Has everybody had a chance to see the swamp? It's certainly in need of repair or change. No doubt, no way around that conversation. But I did have a question, and maybe it'll come later, but it was an enlightening tour for me. It was really good to see that. I don't know how others earned a window or a second floor, but I guess there's always a hierarchy of the way things progress. But nice people over there. There seem to be regular humans. They haven't been morphed into some weird creatures because of the basement. Engineers in general, anyway. But anyway, the question really was, and I don't know if this is appropriate or not, Sue, but I see you sitting there, and the question really is what's been in my head ever since is what would it cost to remodel that lower level for those individuals? Place them somewhere else for a short period to redo that, maybe make improvements of adding a bathroom or a shower if that's what some of them need and other things. Do you have that number? Have you gotten a number like that?
It has been renovated to the extent that we can. What you saw is the remodeled area. That was done within the last 4 years. So before that, we had more substantial problems down there in terms of water seepage and other issues that have been corrected with some additional drain tile and so on. We did install new carpeting, and we painted, and we did what we could. We updated the lighting to the extent that we could. So we have made that area as basically as good as it can be. I would say what we need to do is move them to a different location. I mean, it'd be great if we had room on second floor to put them up there, but we just don't. We've maximized every square inch up there, even moving walls up, into the lobby area to the extent that we could. So I think the answer is that we move them to a different location to get them better office space.
That's the answer I was looking for. I won't go any further. Thank you.
Okay.
Anything else for open discussion? I will take this time to tell our viewers and the people here, this is going out in the your water bill next month, the end of March, to inform you of where you can vote and to try to get you to vote for both the City of Sioux Falls municipal election and school board election. So just a heads up, this is a good flyer. Everyone in the City of Sioux Falls should basically get one through their water bill. So please remember to vote. That'll be about on the 28th, the election, the 12th of April, 7 a.m. to 7 p.m. Polls will be open. Vote early and vote often.
Mr. Chair.
Yes.
I did think of something. I'd like to wish good luck to the University of Augustana's men's and women's basketball teams as they're competing for the Northern Sun Conference Championship this evening, and also to welcome the many fans to our fair city that have graced us with their presence over the last few days.
It was a great game last night. Okay. Mr. Turbeck, are you ready to go? City Administration Building Project, bond financing.
Yeah, good afternoon. Thank you, Councilor. Tracy Turbeck with the Finance Office. And with me here today is the financing team. Bruce Bonjour, some of you may recall Bruce. He served the city as bond counsel for the event center bonds a few years ago. Jessica Cameron and Matthew Schnackenberg are with PFM, and they will be available for your questions, all those folks. And PFM also served as the city as financial advisor for the event center bond. So the city's had a long-standing relationship with these folks, and we depend on them all pretty extensively, particularly when we're looking at issuing new bonds. Now, last week we were here. We had the entire project team here talking about the office building project, what's in it, what it will cost, and how we intended to pay for it. Of course, the action item that's coming up for the City Council is the approval of the bond ordinance that would put in place then the financing for the project. And so today we want to focus on the bond ordinance itself. Bruce Bonjour will speak here in just a minute, and I'll have him introduce himself and give a little bit of background. But specifically what I've asked Bruce to do was talk through the ordinance and let you folks know what the ordinance will do, what's included in it, kind of some of the legal aspects of that bond ordinance. When Bruce is finished then, Jessica will be addressing the bond sale itself, how that process would work, kind of the timeline that might be involved in selling bonds. And I also asked her to give you kind of a lay of the land in terms of what the municipal bond environment is like today. And then when Jessica's done, I'll wrap it up with a couple comments, and then we'll take your questions at that point. So at this time, then I'd ask Bruce Bonjour to address you folks. Thank you.
Welcome.
Thank you. I enjoyed the vote early and often comment. I'm from Chicago.
Oh.
I am Bruce Bonjour. Pleasure to be here. I've been here before. Some faces are familiar. I'm with the firm of Perkins Coie, a law firm based in Seattle. My office is in Chicago. Tracy asked me to tell you a little bit about myself. I've been a bond lawyer for 40 years. 30 of them I've been practicing in South Dakota. I started doing bond work here in 1986. So among my clients, including City of Sioux Falls, are the state of South Dakota. I represent the building authority, so I do all the state building financings, the university financings, the state revolving fund, the clean water SRF, the drinking water SRF. I did the tobacco bonds that funded your education trust fund. And I do the VOCAD transactions, so I've financed many of the buildings at Southeast Tech. So I've been in South Dakota doing this work for 30 years, even though my office is based in Chicago. Most importantly, I think for these purposes, in 2012, we undertook an amendment and a restatement of the indenture that authorizes sales tax bonds for the City of Sioux Falls. You had an indenture that had been drafted in 1988, and it had been supplemented 16 separate times in financings. So in 2012, when we did the convention center transaction, we amended and restated that indenture. We modernized it. We changed the flow of funds. We worked to make it so that it was easier to amend in the future to adapt to changes in the market. And most of those amendments are effective now, given the amount of bonds outstanding from 2012. I think we issued about $120 million in 2 series back then. This bond issue, should you approve it, will be the 3rd bond issue, therefore, issued under the amended and restated indenture. The first 2 were a tax exempt and then a taxable series for the convention center. I believe you have a draft of the ordinance, and I promise not to read it word for word, but let me walk you through it quickly. It's structured in a way that most bond resolutions are these days.
Excuse me, we don't. SIRE is down, by the way. That's why I was just asking the clerk. SIRE is down. There is no handout on SIRE, and there's no handout on our desk.
Okay, so we do not have the information that you're talking about.
Okay, I'll summarize it.
Hey, that would be fantastic. And you will get it to us, I'm sure Tracy will get it to us as quickly as possible.
The bond ordinance will, when you receive it, will be in a traditional form, which, if you've seen them before, the first 3 or 4 pages are full of whereas clauses. And they start with 1988 and bring you to present. In that context, the whereas clause describe your new city administration center, proposed city administration building on 231 North Dakota, and describes it as the project. And the rest of the ordinance proposes to authorize the issuance of bonds pursuant to sales tax bonds to be secured by your second penny tax under the indenture I just described, subject to parameters. It contemplates a project cost of $21,900,000 and would authorize bonds to be issued for that construction cost, plus capitalized interest, a debt service reserve fund, and some cost of issuance. The parameters, therefore, that should you approve the ordinance, that the bonds would be authorized to be issued pursuant to, would have a maturity date no later than 2036, November 15, 2036. It would have a maximum principal amount with the debt service reserve and the construction costs of $25 million, which is intended to be above what you expect to issue. Would authorize the bonds to be issued so long as the overall true interest cost is 5%. Jessica from PFM will describe the market and where she thinks you can issue currently. And it would authorize you to sell the bonds competitively. There would be a notice of sale published and invite underwriters to bid for the bonds, and would authorize city officials to approve the sale to the lowest responsible bidder. The ordinance would also authorize a supplemental indenture, which is something that is done each time you issue bonds. We have a form of that supplemental indenture already provided to staff, and it will be attached as an exhibit to your ordinance. Be happy to take questions either now or after the other presentations are made.
Councilor Erpenbach.
I'd just like to make a correction. Thank you to Tamara, our Assistant City Clerk, this afternoon. The attachments to the item, the first reading on our meeting for tonight, the attachments are there and they are available. Even though SIRE doesn't appear to be working for this meeting, the attachments are there. So if you're, especially for the public, if you're looking for that, it is item 34 on the 7 o'clock meeting this evening if you're looking for those attachments. Thank you.
Good.
I apologize that
No, that's all right.
And then I need to just let people know that we have been alerted by SIRE that we may be going in and out there having some problems. And so we may be cutting in and out. It's nothing we're trying to do. It's the big guys in the sky are playing around with us. So we have nothing, we have no control over it. But we'll do our best to get everything we can there on the TV and on SIRE. Other questions? Councilor Jameson.
Did I hear you right? And I apologize because did I hear you right? Say that the amount to borrow would be 25?
The maximum amount, principal amount of bonds would be 25 to fund 21.9 in project costs. The difference is the debt service reserve, which would be 1 year principal and interest.
Right, I forgot about that.
There's also capitalized interest, cost of issuance are relatively minor compared to the rest.
If I could, one other question.
Yes.
If in a year or two, maybe 3, that there was an intent to pay down the loan because of the sale of certain things, for whatever reason, pay down the debt, is that an option without a problem?
When we sell the bonds, we sell them subject to certain prepayment restrictions. I'm going to look at Jessica here. Are we thinking of a 10-year par call?
Jessica, why don't you come up so we can get you on the tape, or on Sire if we can, and tell us your name, et cetera?
Hi, my name is Jessica Cameron. I am with Public Financial Management, Inc. We have been your financial advisor since 2009. So happy to be here again.
Go ahead and speak into the mic.
Typically, the standard is a 10-year par call. That is what we have looked at to date. If we are considering something other than, if there are reasons to consider an alternative call, we can include that at the point that we are selling the bonds and figure out what cost there might be to that, if any.
Right, I think the way I understand it as well is if you do the 10-year, you're going to wind up with a better rate for those individuals who buy it.
It's a trade-off.
It's a trade-off, right, and if you include the fact that they may pay it down, it becomes less attractive.
The other thing to think of when structuring something like this is that one of the parameters will be that we are going to try and achieve substantially level debt service for all of your sales tax bonds. So you fit the debt service for this bond issue in with the remainder. So you've got substantially level debt service for the aggregate of all sales tax bonds, not just this. So when you're talking about paying down bonds, you can think of paying down any of your outstanding bonds. These will not necessarily be your lowest or highest interest cost bonds.
Oh, very good, very good, yep.
Also, if you do not wind up using a call provision such as that, you will have essentially paid for something that you don't use. So there may be other alternate ways to sort of consider using those funds that still take down debt.
Fair enough, very good.
Okay.
Turn it over to Jessica.
Anything else from the counselors? Okay,
Thank you.
Jessica?
Thanks. So just, I think I briefly provided who I am. Public Financial Management, by the way, we are sort of the largest independent financial advisory firm. So the only clients we work for are municipal entities, not-for-profits, those sorts of things. We only ever sit on the side of the table of our clients, never on the investor side. So just sort of to cover where rates are, we've heard a lot of talk over the past, there's been rate talk forever, but there's a lot in the news right now about the Fed raising rates and kind of what impact that's going to have on the market. When the Fed raises rates, that only impacts the short end of the curve. They cannot do anything, and this is the Federal Reserve Board or Federal Open Market Committee. If you've heard in the news, they did increase their target rate back in January. The only impact this had on interest rates really was on the short end of the curve. They cannot control or impact the long end of the curve. So what we have seen actually is what we refer to as a flattening of the yield curve, meaning short-term rates have bumped up on sort of an average or median basis, but long-term rates have actually remained the same or come down. So just to kind of put this in context, the current one-year Treasury is at 58 basis points, so that's 0.58%. The median on a 20-year basis for that same rate is 2.12%, and the 10-year median, which we've been in a very low interest rate environment on the front end of the curve, is a 0.27%. So we're actually above the 10-year median on the one-year Treasury note. By contrast, the 30-year Treasury, which is the long bond, the current rate for that is 2.61%. The 20-year median for that is 4.5%, and the 10-year median is 3.85%. So right now on the 30-year Treasury, we're more than 1.2% lower. If you look at tax exempt rates, so these bonds will be sold or expected to be sold on a tax exempt basis. Tax exempt bonds right now are outperforming treasuries, which means that they're selling better compared to treasuries or other taxable bonds than they normally do in the market. Right now, the 10-year interest rate based upon an MMD, which is a market industry scale, is a 1.71%, which is more than 1% less than even the 10-year median. Right now, on a percentile basis, it is lower than the second percentile, which means that the 10-year rate right now for municipal bonds over a 20-year basis has only been this low less than 2% of the time. When you look at a 20-year rate, we are at less than a third percentile. So again, long-term rates are very, very low. Most of the rate pressure at this point in time that we're seeing is on the front end of the curve, which is good for reinvestment of bond proceeds and also good for issuing bonds. Do you have any questions on the market before I sort of head into sale process?
I believe we don't.
Okay.
If we do, we'll catch you later.
That sounds good. So once we decide to move forward with the bond sale, and we've not actually set a target date for that yet, just because various things are being figured out on the project, so we'll want to set that when we get closer to knowing when all of those are nailed down. It's typically a 4 to 6 week process. In that process, we will have documents drafted. We will have either conference calls or meetings with the rating agencies, and so that they can provide a rating, again, on the bonds. Your ratings are in the AA category, which means that they appeal to the broadest range of investors out there. It's a very positive thing from a pricing standpoint. There is currently a draft notice of sale in your packet associated with the ordinance. We will update that. This is the document. This is a competitive bid process, which means that we will put out a disclosure document called a preliminary official statement, as well as the notice of sale, which outlines the terms of the sale, telling them what bid parameters they can use. And then we will set a date and time and take bids at that point in time. And whichever underwriter provides the lowest overall cost will be the winner. Typically, after the sale occurs, we have about 2 weeks before funds are received. So there's about a 2-week process for drafting closing docs, getting sort of everything in order for that closing. Any questions on that?
Any questions, Councilor Erpenbach?
Thank you. Previously, one of the things that we've debated has been the difference between the competitive bid process and sort of that more private process. Can you talk to us again about what's the advantage of going with the competitive bid process over other alternatives?
So a competitive sale process it's considered to be, and I'm going to go back to GFOA standards, so that is the Government Finance Officials Association standards. All things being equal, a competitive sale process is considered to provide the lowest cost of funding for any project. And that is, when you look at the factors that impact that decision, whether to go competitive or negotiated, they are things like, is this a known credit in the market? The answer to that is yes. The city of Sioux Falls is well known in the market. Are the bonds rated in the single A category or higher? Yes, you're rated in the AA category. Is the market stable? You know, rates have been kind of bouncing up and down, but overall the market is very stable. There's not a problem selling bonds in the current market. And there is nothing, sometimes it's referred to as a hair on a bond or a story bond, where there's something about that specific bond issue that you're best discussing directly with investors, kind of what makes that bond special. This is, or has a little hair, it, you know, could use a shave. That's not the case for these bonds. These are very straightforward. They are fixed rate, great credit, solid market. All things being equal, a competitive sale should provide you with the lowest price.
And if I might, Mr. Chair, just if you could follow up then, if you could talk about the kinds of investors that you think might be interested in this bond, or is this something that, again, folks in Sioux Falls might be able to invest in this product, or is that, how does that usually work?
So the way this typically works is that they would go through their broker and purchase the bonds on the secondary market. There may be some ability to purchase them on the primary market, but not as much as there would be in a negotiated sale process. That being said, in the current market, investors, retail investors, so the traditional, what we call mom and pops, so those are folks who are buying single bonds in $5,000 denominations, are not the largest purchasers or playing a major part in the current market. There are 2 reasons for that, 3 reasons actually in South Dakota. The first and second reasons apply nationwide. With the loss of the AAA insurers, they all went down in the 2008-2009 timeframe. Most retail investors, because they don't have the time to do the credit work associated with purchasing bonds, would just buy bonds that were insured. We no longer have AAA investors. It's not something that they can just easily say, I'll buy an insured bond. What we've also seen in that time frame is a rise of sort of bond funds. And so these are funds where they manage and purchase bonds, and retail buyers, instead of purchasing specific bonds, I'm going to buy a $5,000 City of Sioux Falls bond maturing in 2018. What they do is they purchase a piece of the fund, and that fund has a bunch of different pieces of bonds in it. And so they're receiving sort of a more normalized credit, and there's not as much credit risk. The other reason why we don't see as much, the other reason why retail investors, don't play as large a part in South Dakota is you don't have an income tax. And so when folks are purchasing bonds, they are looking for tax-exempt bonds. They're looking for the benefits of tax exemption. They receive the federal tax benefit, but they don't receive a state tax benefit. So from a tax perspective, it does not matter to South Dakotans whether they're purchasing a City of Sioux Falls bond or a Chicago bond. Whereas in other states, Minnesota, for example, you receive, we do have income tax in Minnesota, as you've probably heard. When you purchase a Minnesota bond as a Minnesota investor, you receive the benefit of that state tax exemption. I would expect the typical investors for your bonds to be banks, insurance companies, as well as separately managed accounts, trust funds, and then these bond funds that provide sort of the ultimate retail investor distribution.
Great, thank you very much.
Other questions?
All right. If not, I'll turn it back over.
I do have one.
Oh, sorry.
I just wanted to, say that I think there probably is a little bit of a difference between a Chicago bond and a Sioux Falls bond, but I wouldn't I wouldn't want to put any risk tolerance on that.
There's a huge difference between a Chicago bond and a City of Sioux Falls bond. They just don't have state tax exemption, that's why they came
Yeah.
to my head.
I do
Very
have one
different
other
credit.
question, and that is, give us your prediction or your, put on your soothsayer hat. Tell us what you think is going to happen to interest rates in this market in the next 6 months.
In the next 6 months, we're not seeing, I think there is some expectation that the Fed will increase rates again this year on the short end, whether that's in the next 6 months or not, that remains to be seen. As I said, we're not seeing a whole lot of pressure on the long end of the curve, so I think we could see some upward movement just because rates are so low today, but it's not like they're going to return to 20-year medians, I wouldn't expect.
It's like you said, when the 0.25% was added, it really flattened the long term.
Yeah, exactly. Our yield curve went from this to
Yeah.
this, or I guess this to this, if I'm,
Okay, so no significant changes, basically, that you see.
we don't see a huge amount of upward pressure in the current market.
Other questions anyone has? Counselor Jameson?
Maybe not for Jessica, but maybe for Tracy or, is it Bruce? Excuse me, but I was listening, but maybe not writing down everything that was being said. I thought it would be written more clearly. So I'm looking for the amount that we're trying to propose to borrow, term, and those annual rates of payments, what those were. Thought I heard maybe that get laid out, but maybe I was hearing other things. So I'm just looking for a quick summary of how much we're borrowing for how long and what those payments would be.
So the current project cost is about $21.9 million. The maximum par, as Bruce said, is $25 million. In the current market, we are experiencing what are referred to as premium bonds, meaning that you issue a lower par amount, pay a higher interest rate than the yield you're actually paying, and the investor pays you more than the par amount of those bonds. So we're typically seeing a premium in the neighborhood of about 15%. So we would expect that you would issue less than the $22 million less than $22 million in actual par, provided there's no change in the market. If you want, I can get into bond math, but you probably don't want that. We are currently looking at a 20-year term on the bonds. That 20-year term is, we could look at shortening that at this point in time, but right now we put a maximum term of 20 years.
Just in the general scheme of things, going with 22 million and 20 years, the debt service would be how much per year?
Do you have it with you? Okay. It's about 1.8 million.
About what?
1.8 million. 1.8.
The debt, the interest paid? No, okay.
No, the
That's-
debt service. So that is to pay off the full amount that you've borrowed. It would be about 1.8 million
Per year.
per year.
Got it.
We are wrapping debt around some of your existing debt. Additionally, that does not include any refinancing of these bonds in the future. And given where we expect interest rates, where we expect the interest rates, not the yields on these bonds to be, we would expect they could be refinanced.
If you could, again, I know it was said, but the summary of how you are wrapping up those other debt services so that there was an even, I think it was an even,
So we're looking at trying to, it's not entirely a level coverage, but we're trying to get to relatively level coverage. Just, I keep hitting things, put my arms down here. We're trying, you've got some larger payments right now kind of in the early years, and then some of those bonds are falling off relatively quickly. So we'll amortize, or we'll have slightly lower debt service payments on these new bonds over the first couple of years, and then sort of bring them up to the 1.8 million.
So I think I get it. So what the idea here is to not have a spike in debt service or debt payments, shorten the first ones up so that we don't get freaked out with the other ones. All included turns into a high number. This just kind of changes the story, makes it, that's interesting.
Well, it keeps your debt service coverage more level. It also, because you use the second penny for ongoing capital costs and all those sorts of things, it makes sure that you don't damage what you can do on a pay-go basis for a short period of time.
One
Take
last
away
piece.
from a lot of projects that might need to be
Exactly.
done now.
One last piece then. So in projecting in the future, there's likely to be more borrowing to occur for other things. It's always the case. Are you, how are you predicting that? How are you using that as are you using the past as some kind of predictor of what the future borrowing needs are going to be? Is that how you're leveling it out?
We're looking at sort of what your current debt service is.
So
and
you're not including any other future debt?
No, at this point in time, I mean, we've been looking at, and Tracy can probably speak to this, we've been looking at your capital improvement plan, kind of that 5-year plan, but it's not as if we are layering on a bunch of additional debt. As we go out, your debt begins to sort of trail off over time. You've issued bonds on a fairly regular basis. So as bonds come off, new capacity opens up. And you have existing capacity within your coverage levels now.
Okay, hearing no more questions for Jessica. Tracy, you want to finish up?
Yeah, thank you. And if I can just go back to the last discussion point here that you're talking about in terms of the level of debt service payments. What we're contemplating today is that, as Jessica said, in the first few years to keep the payments at the level that can be accommodated within our capital program without having to take any planned projects out of the plan that you folks approved last fall. So that's part of the strategy is to we've allowed for within the capital program up to $1 million for example, for 2017 to go toward debt service payments. So that would be approached as kind of a cap for next year. That's how much we would want to pay toward these new bonds in next year, so that all the other projects that we've got in our plan can move forward without disruption. And the same thing then for 2018. And then when we get out there to that third year, fourth year, we would allow it to go up to that $1.8 million per year. And that's consistent with the graphic. If you recall, last week showed you kind of how that new bond issue would fit in on top of the existing payments. The other thing that specific item you might want to be aware of is that we do have bonds that we're paying with our second penny revenues that will be retired next year. There are actually some state revolving fund loans that were taken out a number of years ago for some stormwater improvements. And so for the past 10 years or so, second penny revenues have been going to pay those. They will be retired completely then next year by the end of 2017. So that's another part of the rationale of keeping them low until those bonds are paid off, and then instead of paying those dollars toward those bonds, we can roll them to other debt service payments. So with that, as Councilor Erpenbach pointed out, and I failed to mention at the outset, that this bond ordinance is on first reading tonight. The second reading, as we're proposing, would be a week from tonight, along with a public hearing and eventual adoption of that particular ordinance. Now, both Bruce and Jessica, as well as Matt, will be here tonight. We'll our intention would be to have Bruce walk through the ordinance again, not necessarily so much again for your folks' benefit, as much as I'm sure you'd like to hear it again, but for the public's, if folks haven't heard kind of the explanation of the bond ordinance and what it does. Well, I've asked Bruce to go through that briefly tonight. And then so you'll get another crack. If you have other questions that maybe aren't coming to mind right now, please hit us with those questions tonight. It's not our intention to bring them back again then for second reading, but they are always available if we've got other questions that you would like answered by those folks, so we can certainly follow up outside of any meetings we might have. With that, I guess I would just open it up one more time for any other questions that you folks have.
Before we open up for questions, I need to let you know that they're posting a message on the agenda's webpage regarding the outage of Sire. Live streaming should be available by clicking Watch New Live Video Now near the top of the agenda webpage, in case anybody is interested in doing that at home. Okay, questions, please. No questions?
Okay, like as I say, if you think of some others between now and
Would this be an
tonight.
appropriate time to discuss a little bit more, so we didn't maybe have to go into so much tonight, some questions that we may have regarding the building itself and that kind of thing?
Well,
Sue is here.
If it's the kind of thing that either Sue or I or Aaron can answer, yeah, certainly. I do believe that tonight we'll have, correct me if I'm wrong, Aaron, but I believe we'll have representatives from Coke Hazard Architects as well as Henry Carlson Construction Management tonight. So, but yeah, if there are questions you think we might be able to answer, we'd certainly take a stab at it.
No one? I have one. We received some information from our budget analyst who did some analysis, and in the paper and the work that he's done, it appears to me that with the number of people we have working in administrative positions, administrative office situations, that through 2014, I know this is not completely up to date, but it appears to me that, you know, and I just state this bluntly, that it looks like we're going to build a building for 24 people or 25 people of 21 million. Now, I know that doesn't look right, but can you give me some background on that? Because we're looking at a total of, at the end of 2014, about 1,160 people working for the city. That was an increase from 2005 of 96 people. But when I take out the people that would be in this new building, we're looking at the attorney, engineering, park and rec, public work administration, and that amounts to an increase in the number of people over that of about 24 people. There would be, I'm sorry, there would be more people than that in there, but in that time, they've only increased about 24 people in those 9-10 years. Now, and this is, these are the people, the administrative people. Mr. Bixer, am I right on this? And so I'm not having second thoughts, but I need some explanation, I guess, as to why these numbers are the way they are, and if they're not correct, we need to look at them, et cetera.
Yeah, I guess I'm not sure what you're looking at in terms of information, but I can certainly provide you with my estimates in terms of the number of FTE in the new building. We're estimating an engineering staff would move over there, as well as some of the parks and rec folks, probably about 20 of them, about 64 from engineering. Utility billing would be 11 people. So we're estimating about 95 to 100 people from day one in the new building. We're looking at historical trends and then looking forward in terms of population growth and permit valuations, all of that, and then trying to project out over the next 30 years, which is what we're hoping this building will accommodate more than 30 years worth of growth. And we have estimated a 22% increase every 15 years in the number of FTE. So over a period of 30 years for the new building, we'd probably go from 100 people to about 160 people, which is approximately what we have in City Hall today, is about 165 FTE. By clearing out a lot of the folks on second floor, moving them over to the new building, we would position ourselves to be able to move the city attorneys as well as the economic development team from community development out of leased space back to City Hall and give us some future growth space in City Hall. So
Community development, they're where?
they're in leased space right now, right across the street, 100 South Dakota Avenue.
Oh, okay, that one, yeah, okay.
So those are the numbers that we've been looking at. Like I said, we want first and second floor of the new building to be able to accommodate growth for the next 30 plus years. And as you know, we'd have that third floor shell available to us. And the thing is that we want all of the office space to be flexible enough to allow us to move people where it makes the most sense. So none of this is set in stone, but this is what we're thinking today of what we would do in terms of the departments and divisions that would move to the new building versus the ones that would stay in the current City Hall, if that makes sense.
Go ahead, Mr. Jameson.
Not knowing that this was going to shift over to this discussion in detail, I do have a few questions for you.
Okay.
The amount that you paid or we spent on remodeling that lower level of the basement, the swamp, how many years ago was that and how much was it?
Well, it was within the last 5 years because it was within my tenure with the city. I can't tell you off the top of my head, but I can look it up for you to see what the remodel expense was.
Yes, if you could, give me that number. And then the other is you answered some questions that we had asked you to answer, and thank you for that. And you outlined a couple of growth areas that are in the City Hall and somewhere else. One looks like it's set up for human resources, and the other one is for the engineers in the basement. It just looks like you have 4 planned growth spaces in building services,
Right.
1 planned growth space in human resource. Okay. Can
Correct.
you tell me about those growth spaces?
Well, that's what's available in the currently remodeled spaces. So in both of those areas, we did some remodeling last year. And in the HR area, we ended up with 1 additional FTE work area. And then in planning building services, we have 4 for growth. On second floor, we have nothing. We've maxed out. The second floor is in terms of the engineering space. We don't have room for growth there, and we don't have room to add the people in the basement to the second floor.
Okay, and then as well, the health department. What is the space there? What do we have access to? Do we have room for other things there?
So the health department resides right now in a county building. And I guess I can't answer specifically in terms of if they have any additional space, but I would say that they don't. I know that they've looked at the possibility of some conference rooms in the upstairs second floor, potentially even repurposing those because they're not complaining at this point in terms of not having enough space for growth, but I think that they are pretty well maxed out, as is the law enforcement center, which is another reason to consider in terms of building a new building. You really, even though you have, like with the law enforcement center, that building was, I think, constructed in 2004, and they are out of space already. And that was just, 12 years ago. So there are some areas within City Hall now that are conference rooms or other like training rooms and things like that that are being considered to be repurposed because they are out of space. So that's why we continue to emphasize that for the new building, we don't want to get ourselves in that situation. We really need to overbuild it so that we have room to adjust in the future.
Very good, and just wanted to share one other thing, I guess publicly as best I can. I had made phone calls to 2 building owners downtown with the intentions of finding a space that they would be willing to sell, that the city of Sioux Falls could potentially purchase. They could vacate it after they build their new place because they're moving. I'm waiting on those details to come back, but I intend to share them with the entire group. And I know you've done some due diligence, and one of the things we asked about was, at the end of the day, was show us some of your work, show us the work that you did and the due diligence that you've said you've done. You stated a couple answers here that you've talked to a lot of those business building owners or things, and that was really it. The idea that they may be moving out in 10 years or 5 years is the options and things that are, I think, very valuable for us to consider. And for me, I need to get there. I need to get that information in front of me. So if you have any of that extra homework, if you will, or that work that you could show us what those people said when you called them and asked about their buildings. Was it only the properties that were listed for sale? Did you contact buildings that were not for sale? And you knocked on their door and said, hey, would you be ever willing to? During the last week, there was a presentation by the Bender Group, and they outlined that the majority of all the buildings that were sold downtown were done off-market, meaning that individuals came to them and said, look, I'd like to buy your building. Would you be willing to sell it? And that's how most of them were done. I think we need to do that, exercise that opportunity, maybe even to the point where we hire a realtor, professional broker commercial broker who understands the market and look on our behalf and connect with those people. I've got to see your homework, or I've got to do it myself in order to get over that hump. So if you have that, share it with me. And when I get the information back, I will share it with you and the rest of what I've found out. So please, thanks.
Mr. Kiley?
Councilor Rolfe and I have maybe yet another way of, I guess, explaining what the direction city growth is going in, and maybe to answer your question maybe a little differently than what Sue did. In some of the information that we had requested from Sue, she had stated that approximately 26% of our city employees are city hall type city employees. Administrative employees, thank you. So with the projections of growth that had been provided, that would mean that actually in the next 5 years, we would see city employees grow approximately 108 employees. So 26% of that would be an additional 28. So now we're at close to 125 to 130 individuals in the new building. So we can project that out just to 15 years, and we're getting very close to doubling the number of city employees in the new building, from 95 to 100 to close to 185 or 90 at that particular point, based on growth projections. And I would also mention that in that 15-year period of time, we're projecting the city growth population to increase by about 47,000 people. So just another attempt at answering your question.
Go ahead, Councilor Erickson.
Since we're on a roll, I guess we'll just keep going a little bit. My questions are in regards to the utility building, and I know we've talked about at one point selling buildings versus repurposing versus lease versus not leasing, and the benefits to those. It's my understanding that we will not be selling the Parks building at this point because it might be repurposed with the Levitt Pavilion being nearby. I understand that it's a pretty cool building. But my question is about the utility building, billing building. What is the intent for that? I know SMG storage was mentioned. And what is it going to cost to get that for them to store? And what do they need to store? Because it's still going to cost to have the building, and we still need to, I mean, I understand we own it.
Yeah, I'm not sure that any final decisions have been made about either of the two buildings you mentioned. I think there are any number of ideas. Certainly repurposing the utility billing office to serve or support the event complex that we have. That's one idea. There have been those over the past couple of years that have looked at that and as perhaps something that the city should sell. So I think at this point, from my perspective, everything is still on the table. I don't think anything is cast in stone. And I think certainly if there are other ideas for how either one of those locations might be used, I think it's a good time to begin to vet those ideas out. There isn't any sense of urgency, I don't think, from our perspective in making a decision on either one of those buildings. We've got what would amount to almost 2 years to decide. If we're going to move forward with this new building, it's going to be some time before Parks is ready to move out of their building and into a new location, and the same with utility billing folks. So I think there's a lot of time to sort through those ideas. Would SMG like to have that utility billing space? I'm sure they would. They've got a lot of things I think that they would like to use that for. I don't know that we're in a position yet to say that that's the best use for that property. You know, the first task for them would be to convince us, I guess, convince the city that they are making the best possible use of the space that they already have. Are they using their storage efficiently? Are there other opportunities maybe that make more sense for their operation? But that's certainly one, I think, viable alternative for that particular location. What it would cost, I guess, I mean, that's something that we'd have to vet out through that process. If that's an idea that really bubbles up to the top, then I think that's the time to really get down to brass tacks to figure out what it's going to cost.
And I understand, if I may, Mr. Chair, I understand if, it needs some updates or whatever. My concern is sinking another 5 minutes, and I shouldn't even use magic numbers. We all know it's not usually good. However, we sink X million number of dollars into another facility when we just potentially spend $22 million on another admin building. That's just pause. It makes me pause for many different reasons for concern of spending more money on making those changes. I know I asked a few questions about that too, and I'm this isn't necessarily related. It's all related, I guess, but 500 to 600 walk-ups to the utility billing. Is that really 100 per day of people that come to that building? I'm just really surprised by the number of traffic, I guess, that comes to that building. And I don't have a point to make with it, but that just seemed like a really high number of people to go to that building. I'll yield my time for now. I have a few other questions, but I'll wait for now.
If I can just respond briefly, the idea that that building might need a significant investment of dollars to bring it up to some usable purpose for SMG, I think is, I can't imagine what we would do to that building where we would spend any significant amount of money to make it usable. I mean, the building itself, we're told, is worth somewhere around $500,000, so we're not going to invest $1 million into a $500,000 property. That just would not make any sense whatsoever. It's in use today. People are in it today, so it's not like it's dilapidated or falling down or isn't meeting code, that type of thing. So that's not to say it wouldn't need some work to make it usable for their purposes, but again, that's a discussion, I think, for the days to come.
Councilor Buck.
Just to add to the questions about the utility building, I did, for giggles, last night go tour the storage areas at the event center, and Jim David and Dave Vixler went with me. I had been curious because I was leaving a concert one time and just got a peek into one of their storage areas. And here's your trivia for the night. In the concert contracts, those 2,000 chairs that are on the floor, they have 15 minutes by contract to get those chairs off of there because the stage has to be moved out so that they can start tearing it down while they bring the lights down. So that's your trivia for the night. Anyway, there are 13 semi-trailers sitting at the fairgrounds right now full of stuff that belongs to the event center via SMG. The turf is out there. all kinds of things are out there in terms of storage. And so it is a massive amount of space that we're in need of. Whether they use the existing in the building efficiently or not is a great question, and they do all kinds of switching around in odd ways. But just be forewarned that whether we take the utility billing building to be part of the storage issue, we got storage issues out there anyway. And so that's just something to add to this. This is a whole big, it's starting to feel like a big puzzle. And I appreciate everyone asking questions about it, but I think we're going to have to be thinking pretty seriously about what are the long-term effects of building or not building. But let's not be kind of just blowing this off. This needs to be something we seriously talk about. So, thank you.
Councilor Jameson?
Just as a couple notes there, the storage out at the event center is probably just a little dirty secret that nobody really wants to talk about. They need solutions. Running the event center that we have is not SMG's first rodeo. They understand what they're doing, proven that. But what brings up in all this discussion, what kind of resonates with me is, I think back to the Spellerberg Pool, the event center, this building, the repurposing of all those other buildings. It's when I look through the 5-year CIP, and I see $150,000 for an indoor pool and or architectural design work or something like that, it just doesn't seem like it's as transparent and or well planned out. That did you all know we would be borrowing $22 million this year? Was that in the CIP? I mean, the debt service was projected to, I think, have $1 million of debt service, but it isn't as crystal clear as it really should be and could be. And just like repurposing these buildings that we're talking about, that should be well thought out and planned, a strategy to all that. I mean, it's clear they're going to work on it, and we've got a couple years to figure it out. The intention is to get this building built. Just go, get it done. We'll figure out the rest. It just was what's irritating me is that 5-year CIP should just be like a well thought out, rehearsed, executed document that it works well for the future. And this is it's clear to new counselors as well that it just isn't laid out that way. And the planning that used to go into that was pretty intense, and now it seems to be different. One other statement I gotta say is everybody needs to be understanding that the amount of money we pay in debt service is dollars that we will not spend on other capital projects, i.e., number one, the roads. We will not spend that $1.8 million on roads. When we did the event center, it was the same thing. The $8 or $9 million in debt service was not going to be spent on our roads. We made decisions, the public made decisions to invest that into the event center. And we had a healthy, long discussion about that with the public. This is not happening with this building. It is go now, ask questions later, get it done. I just need everybody to understand that the money we spend on this building is money that we will not be able to spend on roads, bottom line. Certainly there's needs to be addressed, absolutely. I saw it firsthand. I just want everybody to understand exactly what happens. That's all.
Thank you, and I would echo some of those thoughts of, even though it appears, and Councilor Kiley and I have been on a board that or a task force to look at this for 6 months to a year. We as a council need to look at this and take our time, make sure we don't make mistake with taxpayers' money, and so we need to take our time, make sure we get all the information we need, not only from people in the audience, but from our budget analysts and different people like that, and make sure that we do it right the first time and we don't make a mistake as much as possible. Okay, any other comments? I have one. I have a question for Lori Hogstead. Was she, or did she take off? She took off? Lori, if you can hear me, get out here.